Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The financial markets around the world have rallied amid cooling tensions in the US and China trade war. The United States Trade Representative announced certain products, including clothing and cell phones, are being removed from the tariff list based on health, safety, national security and other factors, and will not face additional tariffs of 10% that was imposed by Donald Trump, which was expected to take place from September 1st, but pushed back to December 15 now. The move to temporarily shield certain products from the latest round of tariffs on $300 billion in Chinese goods was scheduled, as I mentioned, to take effect on September 1, but this has now been reversed. This, in terms, has made the markets a little bit whipsawed and rather volatile. The Australian dollar did respect the level of 67.45 and now back to the top side of the range and looking at 68.15 to 45, which I still call as a supply zone. Keep an eye on these technicals though, because they are strengthening somewhat, and a move only above 68.45 would give some concern to the bullish case. But at this stage, little threat is seen. The euro once again rejects the level around 112 and now looks back towards the level of 111.70.75. A break beneath there would reinstate the downside and look towards a region of 111.20 to 110.60. I do expect from a dollar perspective that the move should increase to the upside, therefore put pressure on the euro. Let's see if it takes out 111.70 today. The rebound of 104.50 to 105, a little bit of that bullish divergence I mentioned yesterday did come through after all, but the market now looks towards the challenge of 107.10.15. A break above there would ignite further momentum, but I'm a little bit skeptical of this move, and let's see how the day trades out. We could see weakness returning because overall we are still in uncertain times, and that would mean the fact that global safe haven demand, that being treasury bonds, yen and gold, still lingers out there. So let's see if this is just an exaggerated move, because the market was most probably quite short as it got down to the bottom side of the range. Little to say about the pound since the break of 120.50. The market's trading sideways and just waiting on news to trigger for a direction. But the break of 120.50 does give some scope towards 119 as a target. Let's see if it continues to the downside today. The gold took a surge to the upside, reached its target at 1,525, and then after posting a brief high of around 34, the market plummeted, posted a bearish outside range day, and took out the support on the downside at 1,488. But the recovery is a little bit pleasing, to say the fact is that the market isn't overall negative. We're still trending and we're still holding, but concerning to the bullish case. But let's see if this signal does imply further weakness. If so, then we could see a move back towards 98 to 91 or down to as low as 74 to 78. Wrapping up with oil, the market rallied 4% overnight. After the break in the level of 54.80, the trigger level targeted the 56 region and was reached after posting a fresh high of 57.31. I do believe the market has now reached its target for now, and I'd rather sit out for the moment, but the technicals between the RSI and the MACD are relatively bullish, so we could still see further upside tests, but because my target was reached at 56, I'd rather sit out for the intraday and see how it plays in the next 24 hours. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to this new day.